Good morning and welcome to today's Fireside Chat at Super Return. My name is Anthony Maniscalco and I lead the GP staking business at InvestCorp, which is an alternative asset manager based in the GCC. I am delighted to be joined today by Mr. Bandr Alhomaly, who is the CEO and Managing Director of Jada FoF, a leading institution that is shaping the growth and development of the private markets in the Kingdom of Saudi Arabia. Importantly, Jada FoF hosted the first Super Return Saudi Arabia, which took place in Riyadh in 2025. The event showcased the momentum of the Kingdom's private capital ecosystem. I look forward to learning today about Jada's investment approach, its work with fund managers, and the opportunities shaping private markets in Saudi Arabia. With that, I'll jump right in with questions. To begin with, how does Jada assess and select fund managers, including emerging and established fund managers, and what qualities are most important when partnering with international GPs looking to engage in the private markets ecosystem in the Kingdom?
Thank you, Anthony. I'm pleased to join you today. And it's great to be back at Super Return International. So many thanks to our host for organizing this event. Now, to your question, I think it would be helpful if I briefly highlight Jada's role, and then I will discuss the criteria we consider when we select and back fund managers. So Jada is a catalyst for growth in the private capital ecosystem in the Kingdom. In other words, we are an ecosystem builder. Now, we understand our industry is young by global standards, but it's maturing fairly quickly, and our job is to accelerate that growth by actively investing in venture capital, private equity, and private credit. And we do that through fund managers. We don't invest directly in companies because our goal is to crowd in private sector investment. And that explains why we do have a dual mandate, which includes both developmental and commercial targets. Now, on the criteria we consider when we invest with fund managers, first and foremost is fundraising capability. But as you rightly mentioned in your panel discussion yesterday, this is only the start, because closing a fund tells us that a manager is able to raise money, but it doesn't tell us about their business plan, the value that they can add to the portfolio companies, or the soundness of risk and compliance functions, especially when the market gets challenging. Also, alignment of interests is critically important. And alignment doesn't mean only sharing the upside, it's also about sharing the risk. And so we look at things like GP commitment, carry distribution, vesting, decision right, and governance. Because at the end of the day, a disciplined GP can build a well-governed company that sustains its success over a long period of time. Now, for emerging fund managers, individual track record is particularly important. And here we look at their experience, but also how close they are to the market to source deals, execute, and exits. And despite the fact that we allocated 60% of our portfolio to emerging fund managers, our return continues to increase year after year, which tells you two things. First, disciplined manager selection works. And second, the depth of the Saudi private capital market. And that leads me to the last point I want to mention here, which is about the Saudi impact. So we look at this in terms of job creation, economic growth, inclusion, among other developmental criteria. That said, we may accept some exposure to other countries, but in this case, there must be a net capital inflow to the kingdom. In other words, the capital allocated to the kingdom must exceed the money raised from it. So this is in a nutshell our role and the criteria we consider when we invest with fund managers.
Excellent, thank you, thank you. How does your investment strategy adapt across different market cycles, different business cycles, and also maintaining a long-term perspective?
Yeah. Well, that's an interesting question, and I'll try to be brief here. So at Jada, we invest through different market conditions. That said, we may adjust pacing, but we don't adjust discipline because we are less concerned about short-lived uncertainty in the market. And I believe any investor in the private capital market should always have a long-term investment horizon so that they can realize the full potential of their investment. And that's why vintage diversification matters. Of course, no one can predict the best vintage in advance, and this is something embedded in our policy and in our approach, because it's very critical to avoid the confusion between market excitement and investment discipline so that we don't chase butterflies.
Yeah.
And I believe this is what builds credibility and what makes the catalytic effect more sustainable. Some fund managers nowadays come to us not only for investment, but also for the role we play in mobilizing local and international capital. And let me illustrate this with an example. In a recent conversation we had with one of our GPs, they asked us to reduce our commitment so that they can increase the commitment of an international investor. This is the type of dynamic we want to see in the market. At the end of the day, Jada's capital can help create confidence, allowing other capital to follow. And that's why we will continue to diversify, not only across sectors, stages, and fund managers, but also across vintages. So this is how we plan to invest through different business cycles going forward.
Okay, excellent, thank you. From your position in the kingdom, how do you view the current political environment, geopolitical environment, and its implications on the private markets in Saudi Arabia and the wider region?
Well, geopolitical risk exists in one form or another. We don't dismiss it. But this is a global issue. It's not a regional one. And often in time, risk and opportunity come together. Now, from a distance, the situation can look very different from what we see on the ground. We have recently conducted an assessment of the geopolitical event, and we haven't seen any material impact on our portfolio. In fact, our proceeds in the first half of the year have tripled compared to the same period last year. Of course, there could be some lagging effects in the private market. But overall, I believe one of the reasons for the market resilience is that Saudi Arabia entered this period from a position of strength. The macro base is supportive, capital market activity remains deep, and very importantly, the private market is maturing. And we also see that in public market activity, venture capital flows, and the growing presence of international investors, which explains the number of cross-border investments that we are seeing in our region, especially from international investors who understand the market well, either because they have a local office or they have local partners. And just to give you an example here, even during this period, one of our Saudi-based portfolio companies raised significant financing from a US-based private credit manager. So that tells you about the investor confidence and sentiment in our region. But definitely, capital is becoming more selective. It's looking for stability, policy clarity, and durable growth. And the kingdom stands out in all of them. So I would say the picture on the ground is more positive than the headlines.
Okay.
But only those who are close to the market will understand this well. And that's why local knowledge matters. So this is, in summary, our assessment of the recent conflict and our outlook for the period ahead.
All right, thank you for that. In the context of the kingdom's broader national vision, which sectors are you prioritizing? What's interesting to you right now?
Well, at Jada, we remain sector agnostic, but there are three industries that are becoming increasingly relevant and important, and these are logistics, cybersecurity, and AI. Now, on AI, I believe the depth of the market in Saudi Arabia is something that many international investors may not fully appreciate. And the most important point here is not a single announcement. It's about the access to energy, the availability of capital, the supply of talent, and the soundness of policies. And these are important pillars for any country to be a global hub for data centers. And that's why companies like XAI and NVIDIA are building major AI infrastructure in the kingdom. Now, a word of caution on AI. Nowadays, almost every company we meet, they have that word AI in their presentation. And our job is to ask a simple question. If we remove that word, is there still be a business underneath? If the answer is yes, then it becomes interesting. On cybersecurity, this is not a speculative theme. It's a resilience requirement. And the kingdom is classified as Tier 1 in the Global Cybersecurity Index. The demand is regulated, budgeted, and recurring. So there are many opportunities in this space. But the key question for international LPs is about access, which of course cannot be achieved without having relationships with investors and founders in the region. Now, one of Jedda's unique advantages is its convening power. So through our market development events, we bring together LPs and GPs to connect and leverage the opportunities that exist in the market. For instance, Super Return is now an established annual event in the kingdom. And of course, this is an invitation to all of you to join us next January in Riyadh for the next edition. And there are many other events that Jeddah hosts where GPs and LPs come together to form partnerships. So this is how we prioritize sectors and contribute to their development in the kingdom.
Excellent. Thank you for that. And I'm going to finish it off with a question around the private credit space. So how does Jeddah view the potential of private credit in Saudi Arabia, particularly as a tool to support growth while managing risk in the current market environment?
Well, we started to invest in private credit because our goal is to bridge any funding gaps we observe over the different stages that SMEs go through in their life cycle. And if we zoom out a little bit, in the kingdom, the banking system remains central to SME financing, and private credit complements that by providing flexible and non-dilutive funding options to investors and founders alike. And that explains the huge demand for this instrument globally. The size of the market is estimated to reach around $3 trillion by 2028. But in our region and in the kingdom in particular, the market remains modest, but it's growing significantly. And as per the latest estimates, the size of the market is around $1.3 billion. So that shows how this promising asset class remains significantly untapped, notwithstanding the benefits it offers in terms of driving economic growth and strengthening financial resilience. And that's why we aim to increase our allocation to private credit going forward. We have already invested with 3 fund managers in this space, but we plan to build on the progress made thus far. On the risks, there are 2 important safeguards that we always consider when we invest in private credit. The first is the Saudi regulatory framework, which prohibits the same collateral from being pledged to different lenders. And the second is our own due diligence, which is thorough and includes financial, legal, and operating reviews. So this is how we plan to advance our investment in private credit while managing and mitigating the associated risks.
All right. Well, thank you very much for that, and thanks everybody for attending this morning, and hope everybody's having a great conference.
Thank you very much. Much appreciated. Thank you.